The junior mining sector has seen a record inflow of capital, but one CEO thinks that this may be cause for concern. Joining me today is Cal Everett, CEO of Liberty Gold. Cal, welcome back to the show. It's a pleasure to have you.
Glad to be back.
We're going to talk about Liberty Gold and its operations in just a bit, but first I want to get your sentiment on the industry. You were telling me that one of the strengths of the mining sector right now is also a cause for concern, particularly in regards to financing. We've seen a huge inflow of capital between May and August. Actually, I was speaking to an analyst just now before you, and he said that between those months, May and August, we've seen more capital inflow than all of last year put together. What's your take on this? How would it affect the industry?
The analyst is absolutely correct. There's more inflow and there's more risk capital available for the developer side of the business. The amount of money being raised and the consistent pattern of upsizing capital raises due to overcommitment or the size of a deal having so much interest that people were fighting to get placed, that is pushing a wealth of risk capital back into the market that we haven't seen this since, it'd be, I think, 96, 97, 2006, 2007, 2010, 2011. Now this is the fourth one in my career in the business that I've seen this much capital be readily available for explorationists. And the concern I have is not over who gets the capital, it's how is this going to affect the public market when so many financings go free trading with warrants? Is that going to put a lid on the developer side of the market for a while until new money digests whatever securities are being sold once they come off a restriction or a 4-month hold period?
So is your concern that the financings are not sustainable at this level?
I still think the financings are sustainable. It's just when you see a transaction announced for $3 million and then it gets upsized to $20 million. And because there's so few quality projects available in the world, we're seeing the assumption of risk capital going into areas where there is open geopolitical risk. And every bull market's the same that I've gone through. People just throw the risk interpretation of wherever that capital is going to be spent, they throw it away, and they just take it on as being nothing. And at the end of the day, when everything good has to come to an end at times, you could actually see positions where share prices do collapse.
Okay, so you think some of these financings are undergoing a premium that in some cases aren't justified right now. Do you think that's reflected in the valuations of the junior mining sector right now? Like the GDXJ, for example, the VanEck Junior Miners ETF is trading at 48% up year to date, which is significantly outperformed the S&P 500.
Yeah, I mean, it's really just a function of so many transactions being done and so many brokerage firms actively investing in the public markets and raising that capital. And now when you see in some finances, funds I haven't seen in the market since 2004 are now coming back that are generalist funds. We're throwing more money into this sector. At some point, there's going to be a breaking point. But as long as you're selective and pick the right projects and that have a resource in the ground in the right jurisdiction, all of those equity raises should become successful, given whatever length this market's going to go to.
So are investors rushing in mainly because of the rally in gold prices, or are they seeing some sort of fundamental shift in the industry in itself?
I think for the most part, it's the gold price. I think coupled with that is the fact that you're going through a U.S. election. We're looking at the issuance of so much government debt at all levels of government, whether it's government, state, province, municipal, city debt, and the slowdown of the global economy and the massive amounts of unemployment. And it's a risk-on transaction right now to own these securities.
All right, so let's go through like a SWOT analysis of the industry. We just spoke about the strengths in the financing and some of the weaknesses in the industry as a result. Let's go on to your opportunities here. As a CEO of Liberty Gold, of an explorer, how would you be looking for opportunities in the space that you could capitalize on?
Well, Liberty Gold has a very specific criteria of what we look for. We look for oxide gold in the Great Basin. And we look for them for multiple reasons, but most of the oxide has already been mined out, the Great Basin. That would be through Idaho, Utah, and Nevada. There's very few big systems left. We happen to have one in Black Pine, which looks like it's a tier 1 discovery. And we have a second deposit that we're deciding now whether we go into an economic to pre-feasibility in southern Utah. That would be the Gold Strike deposit. So these are very few and far between. And my job at running a company is to direct the direction of the company, which is very simple. And that is to keep it simple and focus on our 2 main deposit, keep it in the right geopolitical jurisdiction. We're getting grades at Black Pine that are a multiple of what's being mined. The overall oxide gold target now exceeds 12 square kilometers. At Black Pine, we've increased the size of the projects 3 times by additional land acquisition this year. We had 10 targets that all seem to be interconnected. We've drilled 5 of them, and we have 5 discoveries. So it all comes together, and at the end, for the owners of the company, you want to simplify the story into oxide gold deposits in the right jurisdiction, cash, and receivables. And that's why I spend most of my time monetizing subsidiary assets, which are non-dilutionary to the shareholders because we're monetizing for cash and shares, and just simplifying it. And at the end of this year, I think we have something like 20 million US in the treasury right now. We should end up this year with more money in the treasury or the same amount of in our treasury as we have now. And
how do you pick the right jurisdiction?
Oh, you just go take 5 brilliant geologists and they tell you where to go. I don't meddle into their platform, and they don't meddle into mine, which is a wonderful working relationship. And they're just simply 5 geologists who are absolutely brilliant, and they're responsible for all of these discoveries.
Cal, are you at all concerned about declining deposits around the world, in particular regarding peak gold?
Well, the deposits are declining around the world, in part because they're simply being mined out and they're running out of mine life. I think the last research I read on this, I believe there were 240 75,000 ounce plus producers in the world, and 81% of those are owned by the intermediates, 33 intermediate producers, and the 10 seniors. And we're just running out of these deposits, and that's at 75,000 ounces. And there's very few deposits that are going to do over 400,000 ounces, and those are what the Barricks and the Newmonts are looking for. So those discoveries just aren't happening, and in part that's driven by the fact that and the crash in 2012 of the gold market, it took roughly 8 years for these producers to clean up their balance sheets, and they didn't explore. And because you had a lower gold price, the developers, the exploration companies didn't have the money to explore, which they're now getting a lot of it. And so by the time you take a deposit in the Great Basin, find an oxide deposit, and you take it through, drill it out, pre-feasibility, permit it for production, is going to take 5 to 6 years. If you go into an underground deposit in North America, it could take you 10 to 14 years. Meanwhile, you're mining all those other deposits, and those reserve lives are falling. So the average mine life of a producing gold mine for any of the producers is 10.4 years right now. And in 2017, it was 12.7 years. So that's how your mine life is falling. But no discoveries are made to replace those ounces. And now that in order to build their production back up, we went through not this year, but last year, that massive amount of mergers at no premiums or some premiums to market of one company joining another one to build up their production ounces. And you can see Alicer coming together with SSR this year. And that's still subject to Turkish government approval at the end of this month to get that merger to happen. So it's really, there's just no reserve replacement. And by the time you find one, it takes longer to get it into production. And meanwhile, the production numbers are falling for every major. But the price of gold going up to $1,950 an ounce today, well, that means the average grade of a mine, which is 1.54 grams, under the latest research, you can go mine down to 1.2 grams or 1 gram because you're making up the difference in the gold price to get your margins back.
Cal, would you consider the popularization of gold ETFs as a threat to the junior mining space in terms of capital?
It's sucked in a lot of money up. Yeah, and those ETFs don't participate in private placements or IPOs.
Like, how would you tell an investor who would be interested in buying an ETF that Liberty Gold or any other individual company is probably the better pick?
Depends on the valuation of the asset. And if you think the asset's going to be 2 million ounces, but maybe it's 5 million or maybe it's 10 million, the market's going to give you credit. The market always is a leading indicator of what they're expecting to come next. So they take all the numbers that we put into the market, they take our metallurgy, they look at the reports, and they have to say, okay, they can take an arm wave guess as to how many ounces they think are at Black Pine or Goldstrike.
Yeah.
And then that's how you get your valuation.
We have an interesting environment today of high equity valuations for the miners, but also very, very low interest rates. In this environment, would you prefer to issue debt or equity if you were to raise capital?
I don't need to raise capital, but I'd be doing it with equity if I had provided the share price is the right line.
Okay. And let's talk about your company right now. Black Pine has made several new discoveries. Tell us about that.
Yeah, Black Pine was identified by Morris Smith and our other 4 geologists, April Barrios, Randy Hannock, Will Lepore, and Pete Chatastari. And they're the 5 named people who are responsible for putting what looks to be a tier 1 asset together. And by tier 1, we think it's got room to be at least a 300,000 ounce producer once it's all figured out.
Okay.
And the last time we talked, I think we had about 90 drill holes out, and we're at about drill hole 200 right now. And we had 2 drills going last year to figure out the geology. Now there's 4 drills on it. And everywhere they seem to go, they have to interpret the structure in a sedimentary hosted gold system, which is what they're excellent at, which are the conduits for the fluid flow that is subsequently oxide. And that's why once they figure these features out, that's why we keep walking into high grade oxide. And the average grade of an oxide gold deposit right now in the Great Basin in production is around 0.4 of a gram. And when we hit 55 meter intercepts of a gram or 2 grams or 3 grams, that's payback of capital. And that's what kind of partially answers your question of why Liberty Gold's up 88% this year, because the grades are so high.
Has COVID caused any disruptions to your drilling this year?
No, it hasn't at all.
Why is that? Yeah, why is that?
Well, after the PDAC, we came back and made an immediate decision on a work from home policy. And so we hit it early, and it's not affecting our exploration because 5 of our geologists live within a 3-hour drive of Black Pine. And we're 100 kilometers from the nearest community. We have a strict COVID protocol on site. We have 4 houses rented in close proximity to the discovery for 5 geologists to live in. There's cleaning staff, there's cooking staff. The contractors, whether they're the drill company or the assay lab, all follow a strict COVID-19 policy. 1 vehicle, 1 person per truck. It's as simple as that. They're all separated, and we've had no issues whatsoever. And we make sure that we maintain safety, and if anybody in the community needs anything, we can also help them at the same time. It's a perfect location. It's near infrastructure, has power, near an interstate highway.
Over the last 12 months, you've personally made purchases of Liberty Gold shares worth about $220,000 Canadian. Tell us about what inspired you to have this confidence to purchase shares this year.
Well, the confidence is driven by the quality of the discovery and the belief, personally, that we're sitting on a tier 1 discovery, which is going to be attractive to anybody coming in or worth building ourselves. And I've been with the company for 4 years, and I think I've purchased out of the market maybe 6.5 million shares. And I've never sold a share. And it's just the quality of the discovery and the recognition that this Black Pine is unique. So that's the reason for the purchase, and I'll continue to buy the stock. But because we're in constant news flow, you can only buy after a news release comes out within 24 hours. But if you're privy to assays coming in from a drill hole that morning, then you can't buy it. So we're pretty much restricted for 2/3, 3/4 of the year on any given day, depending on what I'm working on. So you have to find those open windows where you're not in conflict with the internal information that we hold in the company.
Finally, for investors who are new to the junior mining space, what are the biggest risks and opportunities that they should be looking out for?
It goes back to is the project got margin? Is it drill confirmed or is it grassroots? Because if you're buying a piece of moose pasture and you don't even know if there's a moose on it, you're putting a risk capital at a hope and a dream that a geophysical target or a soil sample or a stream sediment sample actually reflects something that's below that sample site or close to. And I always find you're better off to own a drilled discovery and a drilled confirmed discovery in the right jurisdiction. And I also think, because we have one more project left to monetize in Turkey, I'm seeing a start of something I haven't seen since the 90s, where there's a renewed search for copper and gold together in bulk tonnage copper gold systems. And we sold one of our projects for $22 million US that comes in stage payments. We closed on that a couple of weeks ago. And that put another $6 million US in our treasury, and there's another 12 million coming. And that's in Turkey. We have another project in Turkey that has 2 oxide gold discoveries, the 3rd largest silver deposit in Turkey in it, and 3 porphyry copper gold systems there, which is what people are looking for now. And I'm just feeling out the market as to how we approach that asset. Do we sell it, or do we improve it and sell it, or do we give it to our shareholders? And so I'm dealing with 3 different concepts here, and we're just studying internally what we want to do with that asset because they're so few and far between.
It's not because investors are looking for copper specifically, is it right now?
No, they're looking for a 2-element association. They want to be able to invest in the copper market and the gold market at the same time.
Okay. Why do you think that is?
Because when you find these things where you get high-grade epithermal veins that surround these copper gold porphyries, which we have on that property, and one of the targets is called Columbus, and they drilled a hole to drill a vein, and they hit 500 meters of 0.59% copper equivalent, but that was 2/3 gold and one-third copper. So that's a really big target, and we're just trying to figure out what we're going to do with that target at this point.
Cal Everett, I want to thank you so much for coming on the show and giving us your insights. I appreciate it.
Yeah, it's always a pleasure. Thanks.
I'm David Lynn, reporting for Kitco News. Stay tuned for more coverage of the Minds and Money Online Connect Global. Thank you for watching.